And it's January 27, 2023, right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Happy Friday. I'm Ladi Williams. It's great to have you join us. And if you haven't deposited your old Naira notes, you have barely 4 days to the January 31st deadline set by the Central Bank of Nigeria to stop the old 1,000 Naira, 500 Naira, and 200 Naira notes from being legal tender. So it's time to make haste if you still have all of that old notes stashed somewhere. Do remember you can send us your experiences with the new Naira notes to our email, businessmorning@channelstv.com, and we will share your experiences. Let's head on now to the oil market. We see oil prices edged ahead for a second session today, buoyed by stronger than expected U.S. economic growth and hopes of a rapid recovery in Chinese demand, as COVID-19 cases and deaths plunge from last month's peak levels. Brent, that gained about 30 cents to $87.77 a barrel, while U.S. crude WTI, the futures, that traded at $81.35 per barrel. Both benchmarks have gained more than 1% yesterday. OPEC Plus delegates will meet next week to review crude production levels amid steady support for crude prices from strong demand for jet fuel and diesel. And the U.S. Federal Reserve will decide on another rate hike as inflation cools and GDP improves. We'll get all the details. That's next week, and we'll see how that drives sentiment in that market. Let's move over to the grains market now. So U.S. wheat and corn and soybeans jumped yesterday on support from a government report that showed strong overseas demand for all three commodities, with futures that posted the biggest gain, with the most active Chicago Board of Trade soft red winter wheat futures contract that was rising 1.9% after the U.S. Agriculture Department report showed the biggest weekly wheat sales since August. The U.S. Agriculture Department's weekly report that was shown yesterday showed that export sales of soybeans totaled 1.275 million tons in the week ended January 19th, topping market expectations. We'll see how that plays out into price action next week. And back here, the Central Bank of Nigeria and the Nigerian Interbank Settlement Systems, the Bankers Committee, have launched the National Domestic Card Scheme in efforts to aid the country's payment ecosystem. This card is known as AfriGo and will enable African international interoperability by allowing banks and other institutions to offer a variety of options. According to the CBN Governor, Godwin Emefiele, the new payment service solution is the first domestic card scheme in Africa. Take a listen.
Nigeria appears to be leading again on the continent's financial ecosystem with the launch of the National Domestic Card Scheme known as AfriGo. An innovative payment solution to promote inclusion and cross-border payment. At the virtual event, which has in attendance the leadership of the Central Bank, Nigerian Interbank Settlement System and Bankers Committee, CBN Governor Mr. Godwin Emefiele says the card will enhance flexibility for financial transactions.
This effort is not a quest to prevent international service providers from continuing to provide services in Nigeria. Rather, it is aimed at providing more options for domestic consumers whilst also promoting the delivery of services in a more innovative, cost-effective, and competitive manner. We have come up with this card to ensure that all card transactions, online transactions where you're using cards, will now, effective immediately, begin to go on the Nigerian National Domestic Card System.
Some of the features and benefits of AfriGo include acceptability, affordability, security, and data sovereignty. And Mr. Emefiele explains that existing bank cards are still valid.
All domestic card transactions that are going to be conducted in Nigeria will have to be through the Nigerian domestic cards. Your existing cards are fine. You can keep using them. But given that charges by foreign cards are in dollars, we will no longer pay dollars for those cards, for the charges on those cards. Particularly, we will only pay dollars for charges for transactions that are done with whether I do this domestic card or foreign cards outside Nigeria.
The Apex Bank stresses that international transactions on Afrigo commences with immediate effect and will support the growth of a robust and inclusive digital economy within the Nigerian domestic market.
Well, it's official now. Afrigo has been launched. Let's discuss expectations and how this will benefit our financial ecosystem. Join us now is Dr. Babatunde Obrima, CEO, Fintech Association of Nigeria. Joining us via Zoom. Good to have you on the show. Good morning.
Good morning. Thanks for having me.
So it's another first for Africa. First, we had the e-Naira. Nigeria was the first to launch that central bank digital currency. Now, this domestic card, another one. How much of a game changer is Afrigo?
Well, going by what the central bank and NIBS are planning and the bankers committee, it's going to probably be the dominant card in Nigeria, as it were. It gives everybody the opportunity to make a choice. I mean, so all the existing cards are there and the Afrigo is there. So I think that it's a function of you walk into your bank and if you want Visa or MasterCard, it's 1,000 Naira or 1,005 for the card. Or if you want Afrigo, I don't know what it's going to cost, but let's say it's 500 Naira. So it gives people the opportunity to make a choice and the fees per transaction are going to be less. So I guess that it's just creating competition in the market, and I think it's good. It's good for the market.
But realistically, what do you think happens in the long run to other card issuers? You know, the global ones like MasterCard, you know, Visa and Verve. Do you think at some point they would have to be phased out of Nigeria?
I don't think so. When you look at the challenge, really, right now, it's more of there are foreign exchange issues involved in this, you know, that we have scarce foreign exchange, which is typical when you have in an organization, when there's challenges, you want to downsize, you start to cut down on your costs. And I think that's basically what the central bank is doing. I'm sure that if things improve, it's things that will be probably looked at again. I'm sure in other markets where they operate, they probably do not have this challenge, but we have a peculiar problem. And I think that's the way the central bank wants to deal with it. And I think it's just, I think that it's for the short term, really. When you look at it, how do we solve our foreign exchange problem? We need to increase revenue, exports, business. So I think that while we're cutting costs, we also need to start to drive growth in that space also. So I guess that as things improve in terms of our reserves, this might be a policy that might be looked at again.
And how do you see this impacting, you know, the Nigeria payment ecosystem and, you know, international investors, you know, operating, you know, in this payment space, you know, like the fintechs that keep springing up here in Nigeria?
Well, I mean, it could be a challenge, but at the same time, this is a vibrant market. When you look at investments globally, it dropped about 50% last year. But for Nigeria, we only had about a 10% drop. 2021, we had $1.3 billion in investments in the fintech space. Last year was $1.2 billion. So when you look at, we're just scratching the surface when it comes to the verticals, things like agri-tech, insure-tech, health-tech, head-tech, prop-tech. I think that the opportunities for investments are still huge. And with 200 million people, this is really the destination point for investment. So while there might be those challenges, I think Nigeria is still the place to look at if you want to grow fintech business in Africa.
And obviously, we did get, you know, record raises in Africa. That's talking about, you know, Nigeria. But let's look at, you know, security now. Do you foresee any cybersecurity risk with Afrigo?
Oh, well, I mean, cybersecurity risks are a permanent risk for any form of digital transaction. So, I mean, you have it everywhere. So it's a risk that will exist. It's been able to provide the mitigants for it. I mean, as we develop new technologies, the guys at the other end are also developing new ways of trying to break into this system. So cyber is something we have to live with forever, but we can mitigate it by ensuring that we also have better solutions to be able to mitigate. So, I mean, there's no doubt that it will always be there.
And talking about, securities, is everything about this card, if with what you know, is everything homegrown?
Well, from the feedback, everything is homegrown. I think the only thing that wasn't homegrown about it was the consultant, but everything is homegrown.
Okay, just the consultants were imported, if I may say. All right, so at this point, we're the first in Africa to actually do this. Do you see, other African countries maybe adopting, Afrigo, or do you think they would want to create their own, going forward?
Well, so when we go by the name, since it's not Nigeria Go and it's Afrigo, I believe that there's a larger plan to be able to make this a regional card. I mean, that's my perception going by the name. So I think that maybe it's up to the NIBs and CBN to try and get other African countries to leverage on this. I believe that, and with PAPs also, maybe they could be actually the solution to part of the regional payments within to support AFCFTA. But I think that, but you never, one of the challenges we've had in Africa that we like silos. So I hope that we can break that myth and work together this time around.
Right. It'll be great to see how it all, plays out. But, from your, vantage point now, where do you see this card going in the next, say, 5 to 10 years?
Wow. I mean, it can only be on the growth path. I mean, that's the only way it can be. And with all the solutions for financial inclusion, I mean, at the back of the card, you have the QR code there, which should help with financial inclusion. It's also an added value. So I think that it can only be on the growth path in the next 5 to 10 years. And we've seen that in other countries that implemented: China, India, Singapore, Brazil. So I think that we're probably going to see the same trajectory as we've seen in those countries here.
And let's look at, adoption now in Nigeria. Obviously, we've seen issues with, the Naira redesign, some people not, wanting to accept it. But obviously, with this deadline, I believe, everyone would want to accept it. How do you see adoption for Afrigo?
Well, adoption for Afrigo is like almost like no option, because, I mean, except the existing players are willing to accept fees in Naira, and the CBN is not willing to pay dollars. That could be only way where adoption could be limited. But as long as that imbroglio is still there, obviously adoption will be high, because that's probably the only card Nigerian banks will be issuing for now.
And obviously, we know banks actually stopped Naira cards from carrying out international transactions. And obviously, this has impacted people that like to, get some of those services, from abroad. But, with Afrigo, do you see it solving this problem?
Well, as long as we have scarcity of foreign exchange, not in the short term, I don't see solving that problem in the short term. But I mean, maybe as things improve, it might have Afrigo being integrated into the global payment system, and that could also solve that problem, maybe in the medium or long term.
And obviously, we have some, fintech companies actually looking to solve, to bridge, this gap with their payment solutions for people that want to make, some of these payments abroad. Do you see that segment being impacted by this?
Well, since as long as they're getting their funding from other markets, not from the official market, I guess they could solve that problem. But I mean, if you're going to get funds from the official market, obviously you will not be able to solve this problem.
All right, we'll keep tracking. It's still early days for now. We'll see how big Afrigo gets in Africa. I want to thank you so much, Dr. Babatunde Obrema, CEO, Fintech Association of Nigeria. Thank you so much for coming on.
It's a pleasure to be here. Thank you for having me.
So definitely be interesting to see how it all, plays out, because right now card payment systems are a big issue, and going into 2023, it'll be interesting to see how we solve most of these problems. But now, let's take the conversation to a whole new level now. It's all been about climate change, for a while now. We see net zero conversations continuing at this time. And the federal government and the International Renewable Agency have launched the Nigeria Renewable Energy Roadmap to talk us through expectations for Nigeria's green energy industry. We have Chidera Ejiofor, MD, Green Force Group, join us in the studio here. Great to have you on the program.
Thank you very much.
So tell us about this renewable energy roadmap. What is the road looking like for this roadmap?
To be honest, I must first of all thank the federal government for being the first government, first dispensation to take the renewable energy sector serious. And we could see from the transition energy meeting they had in New York with Sustainable Energy for All, the International Renewable Energy Association came with the Energy Commission in Nigeria to create a roadmap for us to at least achieve 60% by 2050. So they're expecting that 60% of the power coming from the national grid by 2050 would at least come from renewable energy sources. So we understand that transitioning into renewable energy has to be a collaborative effort, has to be all hands on deck. We are trying to save our planet and not just trying to say, oh, let's switch our energy sources. Presently, we deal a lot on energy sources that emit so much carbon into the atmosphere. So the drive for the climate change led to this energy transition plan, and it's a gradual process. It starts with the rural communities that are very far from the grid. That's why we have the Rural Electrification Agency, presently empowering communities with renewable energy sources. And presently, discussions are being held to merge the renewable energy sector and to the grid system, where we could have renewable energy grids that go as much as 1 megawatt, and presently have a license from discos to generate power. We also have mini grids that can be done by SMEs as low as 40 kilowatts, 100 kilowatts. So having these conversations alone and seeing that there is action in this angle, I believe the goal is achievable. Presently, to empower the rural communities that don't have power from the grid, also to look at how to merge the renewable energy sector with the present discos, have discussions around this and have a smooth transition. Not like you're trying to take over or you're trying to come into someone's space. We're just trying to put hands together to save the planet. Right. You can see companies like Shell, Chevron, Exxon. Shell has done fantastically well in Nigeria. They've set up the All-On funds and they've been powering communities and they've been empowering renewable energy entrepreneurs in the country.
All right, looking at the situation in Nigeria, right now, I'm sure, coming here, I'm sure you saw the fuel queues and all of that, right now in Nigeria. And obviously, households and businesses are struggling, at this point, because even as we speak, you can't get that much, you're not getting that much power, talking about electricity. How is renewable energy, able to solve this cost problem? Because now people are paying so much, to buy PMS, and obviously you have to fuel your generators for your business and your household. So is renewable energy bridging this gap anyway right now, with the cost implication?
So when we say cost implication, it's actually relative, because renewable energy is a long-term solution. When you have a solar panel, the lifespan is between 50 to 100 years, which is a century. And you have an appliance that can generate power for you for the next 25 to 30 years. Obviously, the initial capital outlay might be a little bit high as to getting your fuel per liter at the filling station. So that's why we need governments. That's why if you see at COP27, the UN Secretary General precisely said that he needs the European economy to come into Africa and support this plan to ease the financial burden on the manufacturers, the entrepreneurs, and to allow us also reach out to our consumers and allow spread payment or consumption, pay by consumption, have renewable energy grids that have their own prepaid meters. So these solutions is how we can get there. However, it's through finance and through government. You can see in California, they try to ensure that they roll out, there are about 80% electrical cars by 2030, 2040, and they're offering tax incentives as high as $5,000, $7,000, $10,000 if you drop down your fossil fuel car and you switch to an electric car. So renewable energy actually needs financial support.
Because that means in the short term, it's still quite, expensive.
It's a long-term decision.
Okay.
You're getting something that can generate power for you for 30 years as opposed to spending. We can look as far as someone using a small generator now in this fuel scarcity. In a year, you'll probably be averaging around 500,000 to $1 million on fuel.
And we still have the diesel issue.
Yes, and you're not even talking about the cost of servicing, cost of maintenance, or cost of acquisition. But when you have a renewable energy solution that might cost you what that would take you for 2-3 years, you'd see that in the long run, over a decade, you saved yourself some money.
And obviously, it's still early days in 2023, and obviously there's some trends I know that must be coming up at some point as we go on in 2023. What do you think? Maybe you could highlight some of those things that might be coming on board soon in 2023.
Okay, so in 2023 presently, we have the Rural Electrification Agency of Nigeria. We have the Nigerian Electrification Project. We also have this energy transition plan. We also have the presence of sustainable energy for all in Nigeria. We have other non-profit governmental organizations, EU, GIZ, USAID. All these foundations are in Nigeria presently, trying to ease the transition and support renewable energy entrepreneurs in the country.
And obviously, we'll be looking out for all of that as it comes up. But looking at where we are, right now in Nigeria, I know we need to create awareness because some people don't even know that their practices are, impacting the climate negatively. So, what kind of awareness do you think? Where are we when it comes to awareness, and what do you think we can do to improve that?
First of all, I've always said this, and I'll say it again. We should incentivize people activity of switching from fossil fuel to renewable energy. We must have incentives for people. We must give them reason to. Then also, it should be implemented in our curriculum. Our educational system does not have any renewable energy costs. You have other countries like India, China, United States, they already have people in elementary school and high school,
right,
actively receiving renewable energy courses. So if we're not even thinking in that angle, we should take a step back. We don't have any solid renewable energy academy presently in the country. We don't have people presently preaching to the women in the market or the local communities to explain that, oh, this is the effect fossil fuel has on our atmosphere, and our planet might be done in a century if we don't switch to renewable energy sources. So I believe with the present activities going on in the background, which I'm very aware of, I'm sure by the end of 2023, there will be serious enlightenment on renewable energy in Nigeria.
And obviously, it's an election year, and next month, we'll be ramping up the elections, and people will be busy, voting for their preferred candidate. And obviously, going forward, I'll be wondering what kind of advice you'd like to see, or what kind of advice you'd like to give the next CEO that's going to take over, how they should actually address, climate change, the kind of investments that, they should actually be putting towards the issue of climate change.
So commending this government was good. We saw the vice president is moving, traveling about, trying to create some awareness on this. I would ask for this government to take action. To take action down to the local government level. If we are to implement renewable energy, it should start from the local governments. We should have empowerment programs for the small SMEs presently being supported by the local government, the small markets. We have markets like in Kano, we have Sabongeri. In Lagos, for instance, we have the Agege, we have the one in Ota, we have Abulegba. Small markets like this can receive renewable energy support from local government, and at this point, they can now understand, oh, this is the effect. I have a solar panel. Once the sun comes out, I have light in my office. And with solar, you have to understand that energy consumption is not like a generator. You are exhausting power that has been saved in your backup. So we can have the government come down with serious action plans from local government level, then to state government level, to see how they can, first of all, create some incentives and some awareness in the local communities. We still know that the literacy level in Nigeria is pretty low. So we have to start with local empowerment.
All right. And obviously, we're all looking forward to that'll be COP28.
It's COP28.
That's coming soon. And hopefully, we'll be able to solve this whole climate change issue. Thank you so much, Mr. Chiderejo, for MD Green Force Group. It was great having you.
Thank you very much for having me.
All right, so we'll take a break now. When we come back, well, we still have startups raising record amounts, that's Nigerian startups in 2022. Let's see what the space holds for them. Talking about regulation and taxes. That's our next conversation. Just stay with us. Welcome back. Still watching Business Morning live from Channels HQ. Well, to our next conversation now. Startups in Nigeria and other African countries raised over $4.85 billion in 2022, according to data from Africa, the big deal. While this could still cross $5 billion after delayed funding announcements from investors are made. Let's get a sense of how startups navigated regulation and taxes and what to expect in 2023. Talking about trends. Join me now is Rosemond Phil of Ihiwa, corporate commercial attorney and partner at Debo Akonde LLP. Great to have you on the show.
Thank you very much. Such a pleasure being here.
Nice.
Thank you.
So quite an impressive raise, by Nigerian startups. Break it down, because obviously I know regulation is still an issue,
of course,
for that industry and, most of these, SMEs. How was it for them? How bearable was the Nigerian system for them?
Well, looking back from the post-COVID era down from 2021 into 2022, as much as the figure sounds large, it was actually quite a slight drop from 2021. And the reason is because, of course, the global instability really contributed to that as well. But in terms of regulation, as we all know, there was a new Finance Act, of course, which was in 2021 that was signed. And you have a lot of these startups having to grapple with so much regulation. Right? Even out of that 4.8 billion, 75% of that came from primarily 4 African countries. Of Nigeria, about 1.2 billion, right? Causing that funding. And this was just the undisclosed rounds. Now, if you look at how startups have navigated the process, it's really just coming to terms with the innovations and the continuous iteration processes that the government have brought, right? Started with 2022 coming up with so many introductions as to, of course, VAT for non-resident companies. And then, of course, you have tax, of course, of digital companies and all that. And now you already know that there's a new finance bill that is already up. And then there's going to be the taxation, of course, of digital assets and all that. So there's just a lot of regulation going on. Well, to some extent, it's been quite bearable. And, of course, to culminate the end of 2022, you had the Startup Act, which was obviously signed into law, which is an attempt by the federal government to be able to, bring all these regulators together. If there's one thing that stands out for me is that these regulations in itself is not just going to be scattered here and there. For me, the essence of acts and laws is for proper and prompt implementation. If you're dealing with laws that are primarily in a technologically driven economy, then those laws have to catch up, because technology is such a fast-moving sprint. So the fundings were good. Of course, primarily about 37% of them was in the fintech alone. Of course, we know that. We have those in health tech, agri-tech, edu-tech, and the rest. So it was quite a good run. But I would say that there's a lot more innovation. There's a lot more, putting these regulations together to ensure that it's not really cumbersome. So there's a lot that the Startup Act has come to do. So I think, for me, that would be like my topmost regulation, apart from, of course, the taxes that everybody, has.
And with the Startup Act, how much clarity is it, bringing to the table, looking at 2023?
Oh, yeah, I think it's a lot of clarity now, because now a lot of attention now is going to be brought down. You know, the market right now is trying to stabilize and reset itself. From 2022, where there was a lot of, you know, push for valuation round, funding rounds going on here and there. Of course, you know, some of the not too pleasant news as to the crash of the FTX. You had some, the JP Morgan, you know, coming against Frank, which was an investment, some that, you know, falsified records and things like that. You know, you saw some of those things. So it was kind of like an up and down scenario in 2022. So the market is in a state of just trying to really balance it out. And now I think the smoke is going to be cleared out of a lot of investors' eyes. Investors are going to be paying critical attention, not just to numbers on paper, but core traction. There's going to be a lot of attention being paid to, you know, sustainable practices, corporate governance, right? There's going to be a lot of looking at the metrics, and you're just not going to talk about just calling out figures. So I think that, you know, one of the things that a lot of startups need to start doing right now is really paying attention to their core processes. People are coming back to base. There's going to be a lot of, you know, in-depth due diligence, you know, from stakeholder management to ESG matters to financials to understanding the run rate or burn rate of the capital that you even receive. So fundraising is not just all there is to just, you know, being a startup. It's your sustainability.
So
in
with
the
all
long
this
run.
scrutiny that, you know, we're expecting, that means we might see a slowdown, because that means the cash is not going to come out.
Definitely, there's going to be a lot of attention paid to your process rather than just your figures, right? Because of the bad experiences that we are all seeing and all that. So another thing I would like to say is the mass, you know, retrenchment of talented workers from a lot of these global companies. You're going to have a pool of a lot of tech talents, right? So these startups are going to have to position themselves to attract, you know, one of the top talents, and also, you know, show that they have internal processes that can lead to sustainability, not just of their profit or income, but of the jobs of their employees as well.
All right, let's look at the trend, you know, expectations. What are you seeing in the horizon, you know, for 2023?
Well, it's going to keep growing. I foresee a situation where you're going to still have a lot of startups coming up to innovate, but it's not going to be as rapid as we expect, because a lot of startups are going to be paying attention to these core things that I mentioned earlier. You're going to see the rise of a lot of agri-tech innovations. The government is paying critical attention now to the agricultural sector. And even in taxation, I also see a situation where the government is trying to enlarge the tax net. As we know, about 10.1 trillion was raised just last year as a result of taxes that were brought in, and about 59% of that was from the non-oil sector. So you're going to have a lot of attention being paid to revenue generation as far as the startups are concerned. So agri-tech, health tech, edu-tech, those are some of the things that we're going to see. Of course, fintech has always been there, and you just keep growing from there.
That's the darling.
Of course, that's the darling of the tax
system.
So
what kind of legal considerations should these startups, you know, be looking at, you know, before going out there to raise all these funds? Because it's fun when you hear, oh, this startup raised this amount and that amount, but those legal, you know, considerations that protect, you know, both the startups and the investors.
Of course. So depending on the stage of growth for those startups, some startups are in ideation, some are in incubation, some are in the MVP stage, and some are the scaling, and of course, they're trying to expand. At those critical stages, you need to pay core attention to the internal organogram, structure of your business, because one of the fundamentals of corporate governance in itself is managing stakeholder relationships between maybe your board, your shareholders, your employees and staff, ensuring that those right documents are put in place. At the point of raising seed, whether it's pre-seed, series A, B, or C, you need to pay attention to key metrics as your valuation, your cap tables, and then of course, stakeholder engagement with your shareholders. Those core documents are very, very critical if you know you are going to, because you don't want to come to a point in a situation where, for example, the Startup Act basically states that for you to be labeled under the Startup Act, you need to be given a certificate and given a labeled status. For you to even get that status, you must have been less than 10 years, you must be a limited liability company. So companies that are not even up to that or doing that, they have to start regularizing. So I think if anyone is going to take advantage of these critical regulations that are coming in, they need to start looking at the requirements. Okay, do we have our founders agreements together? Do we know what's going to happen in the event of any stage of seed funding? Our papers, our financials, our documents, you know, are they legit? You are not just falsifying records or figures, right? Are you looking at the core internal corporate governance processes of your organization? Startups are not too small to have a board, even if it's an advisory board. So understanding those relationships, ensuring that, you know, those key management processes are iterated, are constantly developed, are managed. Those are some of the things that they have to start paying attention to, because VCs are no longer excited about figures anymore. They want to see the real deal.
They want to see it all.
They want to see the real deal.
All right, thank you so much, Rosemond Filofi, our partner, Debo Akande, LLP. It was great having your perspective.
It was so good to be here. Thank you.
Thank you. All right, now, so, well, we've been talking about startups there raising incredible amounts in Nigeria. Nigeria leading the pack in Africa, which is quite good, for our startups. But now let's head on to the market. So let's see what's happening there. We saw a green close yesterday, quite impressive. And we have Anete with the details. Now, Anete, great to have you. Green yesterday.
Yeah, good morning.
Good morning.
Green is, well, actually blue is my favorite color, but
all right.
In terms of when you talk about gains, green actually is my favorite color.
Right.
And as markets is concerned, green is also my favorite
Except
color.
you're shorter than, you'd like to see red.
Some people like to see the red because that's when it's time for them to go into the market.
Right.
But when you're in the market, you just like that green color. You just want it to continue to go up, not on the downside or south. So with that being said, I'll just give you more details of Thursday's activities at the NGX as well as the FMDQ. Now, for Thursday, the market, it made a rebound, a very sharp rebound for the close of Thursday's trading session. 84 billion, actually it's 83.51 billion that was added by approximation. We call it 84 billion added to the market, 0.29%. That's the amount the all-share index climbed back, but still within the 52,000 points. Year to date, we're still in the positive terrain, almost 3%, 2.93%. That's how the market has performed so far in the month of January. And January is just a couple of days into making its exits and then paving way for February, another new month still within 2023. Now take a look at the board there. Banking sector. The banking sector was the main reason why the market made that more than 0.25% rebound, 1.58%. That's how the market performed at the close of Thursday's trading session, but it was also supported by Gerugu Power. Now, in terms of market breadth, we had 25 gainers, 7 losers. So now that's the reflective of what you see here across the sectoral performance, but only the industrial goods counter was marginally down by 0.01%. Let's take a look at the activity chart. Activity chart, volume traded there, it was up by 16 points, almost 17%. But across the other parts of the activity chart, value was down by 24.84%, deals was down by 0.8%, which is just about 3,549 against what we had on Wednesday. Now, we will be talking to our stockbroker who will be giving us more details about that market. But before that, let's head straight to the unlisted securities market. For the unlisted securities market, it made a rebound by 0.34% against the 1.43% loss recorded. But now let's head straight to speak with our stockbroker, Andy Saku, the stockbroker at Capital Care Trade Securities Limited, to tell us more about that market. Thank you for joining us, Andy.
Yeah, good morning, Anete.
Yeah. Okay, so I have 3 questions for you. So I'd like to, can you give us a review of Thursday's market performance? So far we've not had any fourth quarter 2022 results, but aside from Unilever. But just talk us through yesterday's proceedings at the NGX.
Yeah, okay. The market has actually been quite on an interesting heartbeat, so to say. Regardless of what has happened from the MPC outcome, particular reference to the MPR. So by and large, what we've seen is that the market has more than largely imputed or impounded, the decision of the MPC into its valuation. And we saw, an uptick in the market yesterday, which has more than compensated for the 2 days following the MPC declaration of a hike in MPR that saw the market decline marginally. So on the whole, if you ask me on the back of that decision, we have seen, some kind of traction in the positive territory.
Okay, now we're still dwelling on that MPC's recent rate hike, which is the fifth so far since last. Now, how is it impacting on the banking sector stocks as well as the industrial goods stocks and the consumer goods counter? So and also, how is this also affecting investor sentiment?
As you would probably have known, the MPR is not a decision that affects only the banking stocks or any particular stock for that matter. MPR is a leading benchmark indicator for the entire market. So there, basically what you should be talking about much more is how does that impact on the economy on the one hand, and in specific terms, probably the capital market. So that said, like I started, the market, which is basically a key barometer of the direction of the economy, has more than offset the outcome of that decision. MPR was jacked to 17.5%. However, other rates that relate to that benchmark rate have not actually moved in that direction. For example, if you're talking about Treasury bills rates, which is government-led, or the bonds, as it were, we still have those rates or yields on them, not so much a departure from where they were. As a matter of fact, they are very much way apart. So basically, what I do think for the capital market, you're likely to see less of deviation from what we have at the moment. Instead, you probably will see some kind of appreciation, speaking specifically for stocks. And when I'm talking about stocks, I'm not excluding any segment of the market. You can actually talk about the banking space, maybe because the stocks in that sector appear to be more liquid than any other segment of the market. And that's closely also followed by the industrial and the consumer goods space. But in terms of the momentum and direction that the market entirely will go, my take is that the market has very good opportunities for discerning investors to be able to key in. They are very likely also to reap a lot more than what the MPR is likely to induce. So for the fixed income product, I do not think that in the short, even to the medium term run, interest rates are likely to jump to the roof, as probably some would have expected. And that's also explainable. If you look at the realm of treasury bills, the bonds, if you look at the federal savings bonds in specific terms, the rates are actually oscillating between 2% in the 91-day treasury bills rate and to as low as maybe 11-13%. So that given, we saw the market, for example, gain 20% last year. And that is on the heels of the individual performance of quoted companies, which interestingly have weathered through the storm of the economic downturn. And that's quite, for me, impressive and interesting, mutually speaking. So to that extent, I think that investors should not lose any shine in the direction of the MPR, as it were. I do think also because the CBN also has the call to make with respect to MPR. Very soon, they are likely to make a downward adjustment. That would be my take on that.
Okay. So, Annie, so one final question before I let you go, and just within 60 seconds. Now, I'd like you to, can you give us your outlook for the month of February, which is just a couple of days from now? So far, the month of January is at 2.93% before the close of Friday's trading, and then we're also expecting Q4 and FY 2022 results to be released. So what's your outlook for the market in the coming month?
February is a very interesting month for Nigerians, and not so much just the market. It is a deciding month for Nigeria, and hopes are alive, hopes are key. Against all odds, against all fears of all kinds of dimensions, I am still on the positive run, both for Nigeria as a nation. The presidential elections will come and go. gratefully, by this time next month, we probably will know who is going to take over from the incumbent. And for me, that's quite an interesting month. So there are hopes to be returned, hopes to be rekindled, and hopes and aspirations of Nigerians that should never be given up on any scale. That said, and going also by the reality on ground, the economy is going to jumpstart, the economy is going to reverberate. I do think Nigerians are in for a better day.
Okay, thank you so much, Andy Saku. That was Andy Saku, stockbroker at Capital Care Trust Securities Limited, speaking with us. So, Ladi, that's it for the market. You heard the stockbroker speak, being very optimistic about the month of the election month, to be precise.
And I'm sure you've experienced, many elections, and obviously you've seen how the market, reacts to all of that.
Yes, and sometimes the market just always has a mind of its own, might defy whatever the risk is, whatever the projections may be. Right. It just turns out on its own.
And let's just hope, investors are, on board with whatever happens.
Exactly.
All right, thank you so much, Anita. Looking out for today's close for the equities market. All right, let's look at other markets now. We see Bitcoin there still holding up quite well. Had a good week this week. We see it attempted a fresh increase above the 23,500 resistance zone, but we're below that, at this point. But interestingly, I don't know when last I saw this, in this market, talking about the fear greed index sentiment for the market. Finally, greed. I've not seen greed in a long time. It shows that investors are really, really bullish at this point. Across that 55-point level, and we're seeing the market, after being in extreme fear for the longest part of 2022, for the first time, we're seeing greed in January 2023. Let's look at the market cap this morning, still above that $1 trillion mark there, 1 trillion, and then for there, down 1.05%. We see a pullback from that resistance level we saw at $23,500. We see volume traded, that's down 11.04%. Bitcoin dominance sitting at 41.42%. Let's look at the price of Bitcoin now. See that holding on strong at the 23,000 level by hair's breadth there, by $15 there. Down 0.10%, $26.11 billion. That's the volume traded for Bitcoin this morning. So we're seeing still holding that 23K level. But if it stays longer below the resistance level of 23,005, we might see some downward pressure. Let's look at the price of Ethereum. That's holding up to $1,581. And we see volume traded up $8.62 billion this morning. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Good morning.
Good morning, Ladi.
So quite an impressive weekly performance, and January is looking quite good for the crypto market. And I don't know when last you saw greed in this market, talking about the sentiment. We're seeing greed right now. So it looks like January is just a good year for Bitcoin. And we see Goldman Sachs there saying that Bitcoin is the best performing asset in 2023. But it's still early days, though.
Yeah, definitely. So far, so good. 2023 has been amazing, and we've seen lots of alts rally quite high, and we've seen a quite impressive performance from Bitcoin. I mean, Bitcoin has been holding the range of 22K for almost about 3 weeks now, although we are still very, very much expecting it to correct to the range of 20 and 21K. But so far, it's been nothing short but of amazing from Bitcoin.
Quite interesting. And if we flip over to the 7-day gainers there, we see the T token, that's a threshold, is topping the counter for the 7-day. If you take me to the 7-day gainers for this week, we see threshold there topping that counter. Big 148% boost there to the price. And Aptos, $18.60, 135%. Solomon, why are these two rallying so much? Why they rally so much this week?
Yeah, so threshold is basically because it just broke above a key level, and obviously it's just been rallying because the volume is quite extremely high. Whereas for Aptos, Aptos is actually at price discovery. After we broke above the range of $13 and $14, we've been on price discovery, and most likely most persons are calling that we might see about $22 to $25 for Aptos. But I doubt that. I believe the top for Aptos this month was at $18.5. So basically, we are still on price discovery for Aptos. It's possible we can get to $30, but I wouldn't advise anyone to go long currently now, because for me, short term is overvalued.
Yeah, quite a lot of gains for those two at this point. But, going into next week, we know the Fed are going to give us that rate decision come February 1st. But, what's your game plan, for the market now? Are you on the sideline, or are you still, staying in regardless of what the Fed does on February the 1st?
So we should remember that generally speaking, we're still in a bearish market. Despite the short-term rally from Bitcoin and alts also responding positively to, I feel what everyone should be doing now is take as much profit off the market as possible. So what I'm doing basically, I've taken as much profit, and I'm still looking at some other assets that haven't moved yet to take more profits, like CHR2 to take very good profits. So my game plan right now is to short the market, waiting for the response from the Fed. So I'm just waiting for Bitcoin to break below 22,500, and I would go short, expecting alts to retrace drastically.
Yeah, I can imagine. I know the shorters are getting ready, sharpening their swords, at this time. But thank you so much, Solomon Munde, financial market analyst. Thank you so much, and enjoy your weekend.
All right.
Yeah, that was Solomon giving us his game plan there. He's looking to short, this market, but you know how this market can be. It can be quite, dynamic. You expect it's going to go this way and it goes the other way. Let's look at that Phantom there. That's also the top 7 gainers for this week. It's up 56%. Phantom's had quite an incredible run towards the end of 2022. This was trading about 18 cents. At some point when we saw volatility with Bitcoin, but we see Phantoms had a good run. It's up 56% in 7 days now. We see eCash also having a good run too, up 43.43% in 7 days. Let's look at the top 7-day losers there. We see HNT is topping that counter, down 5.07% for the week, $2.87. And Casper did have a run, at some point, but we're seeing pullback there. Could be some profit taken. We see Engine token there, Metaverse coins there, 41 cents. That's down 1.45% for the week. And that's how the market, the crypto market performed this week. Quite a bullish run. And it'll be interesting to see if this bullish run can actually continue into next week, knowing that the Fed going to meet and going to give us a rate hike. So it'll be interesting to see what happens with that. That's it for the market today. And that's it for the program. Thank you so much for watching. We still have Business Incorporated 1:30. You can watch that for more updates and developments in the world of business. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, flip to our videos and watch all our productions. Thank you for watching. Have a great weekend. Bye.